Well, we're only a few days away from the announcement of the next federal budget, with the budget being brought down next Tuesday night. Now, the government is going to benefit significantly from the strong improvement in the economy relative to the last budget update that we saw in December. So at that point, the government was thinking that the unemployment rate would average around 4.25%. Now we think they'll opt for 3.75%. Wages growth around 2.5%. Now we're looking closer to 3.25%. And most importantly, commodity prices will be lifted significantly in the budget numbers. So back then, the assumption was that the iron ore price would reach $55 a tonne by June 2022. We now think they'll extend that out to March 2023, and of course take into account the fact that right now the iron ore price is around $140 a tonne. So all of those components will mean that the economy is much larger, but the tax take will probably be a little higher as a proportion of the economy anyway. What that means is that we think that over the 4-year period, the budget bottom line will improve by about $78 billion. And what we think will happen is that of that $78 billion, the government will choose to use $58 billion of that to improve the fiscal position and $20 billion for new policies. Now bear in mind there's another $16 billion available from the money that was allocated in the last budget update but wasn't actually spent and wasn't given an actual label. So there's about $36 billion available, I think, for new policies over the next 4 years. And very much of that, I think, part of that will be targeted very much at the cost of living. We think there'll be about $4 billion there. There's talk about addressing the petrol excise. Getting rid of the whole excise would cost $11 billion a year. I don't think that'll happen, but there could be some indexation or some partial relief that would be targeted and wouldn't be a permanent relief. Now, is that $78 billion a big surprise? Well, to be honest, in last year's budget, there was a $100 billion improvement due to the faster than expected improvement in the economy. And then once again, in the budget update in December, there was another $100 billion improvement in the budget position because the economy had surprised to the upside, and of course commodity prices had held up really well. So other parts of the $20 billion new money plus the $16 billion money that's not been allocated yet, I think most of that will be allocated towards the supply side of the economy. Things like training, energy, reducing red tape, developing the regions, boosting Australia's manufacturing sector. All those factors will be important in terms of the government's approach to be moving away from protecting the economy from the huge shocks that we had to boosting the supply side of the economy so that we can grow more rapidly without inflation pressures. The other issue is going to be we are now looking at a government that is way behind on the polls and with an election coming in the next month or so during the month of May. So when we've seen that in the past, in 2007 and in 2013, governments took incredibly aggressive policies during that budget. But in 2019, this government, that was also under similar pressure to the one we're seeing today, chose to target returning the budget to surplus. And of course, as we saw, the government was successful in the election. So it doesn't necessarily mean that if you adopt a fiscally responsible policy in your budget, that you'll necessarily really make it very difficult to get re-elected. So that's why I think it still makes sense that we'll move towards that particular approach. One of the key parameters that we look at is the proportion of GDP represented by debt and where that maximises. So at the moment, the expectation is it'll peak around 50% of GDP in 2028-29. If we see these budget developments, then we could see that peak at around 46% of GDP in 2024-25. Finally, tax. Now, I haven't mentioned any tax reform in this budget. And what I do believe is that the low and middle income tax offset that's been in previous budgets but was there as a short-term initiative to tide people over until the stage 2 tax cuts were introduced. But then they got introduced 2 years earlier than expected, but they kept the Lamito. Now that's about an $8 billion tax subsidy that would, if it's kept, will start in 23-24. I suspect they won't continue to do that because keeping that tax subsidy was there to try and support the economy. Now we're focusing on fiscal reform. That particular initiative won't be necessary. But remember that we're not looking at the end of the line for tax reform. Because remember, in 2024-25, as is legislated and funded, that stage 3 tax cuts come in. And that is the greatest tax reform we have seen since the GST. So people that are on between $45,000 and $200,000 will be on a flat tax rate of 30%. And the 32.5%, the 37%, and the 48.5% tax brackets that had been in the past been in that range will all be eliminated. So don't think that if we don't see any major tax reform in this budget and it's focused on fiscal repair, that we don't have significant tax reform coming down the line. So it's going to be an exciting night. I can't be certain that the policy of fiscal reform will be the one the government adopts. We've got some precedents where other governments that have been in this sort of political trouble have gone the other way. So it'll certainly be an interesting night as to how the government decides to use what we think will be that $78 billion improvement in the bottom line. Thanks very much.